Hello, this is Data Trader Pro with a weekend update from Sunday, July 17th. And yeah, let's go over what's happened in the markets as of late. On Friday, we had a push up to new all-time highs. Maybe I'll start with the S&P, and that'll get us going. Sorry, 1 second. So let's look at the S&P 500. We broke old all-time highs. That's been a issue for the last more than a year. Our top was in May 2015. We've had a lot of corrective moves, very quick snapback rallies, pushes lower, multiple pushes lower. But you see that every time we've gotten into this, 1800s range, that seems to be a bit of a bottom. Well, not a bit of a bottom, a real bottom. The moves back have been fast and furious. I don't think I can remember any time in the markets where we've rallied so far, so fast, or dropped so far, so fast. So I'm not sure exactly what the urgency is right now, but look, this is on a weekly chart, S&P 500. We're above the weekly Bollinger Bands. We've gone from almost the bottom Bollinger Band to the top in 3 weeks. Though the Bollinger Bands got compressed in this region, so they're narrower than on a large move. Still, I think that's the fastest I can remember bottom to top, unless you get into a really narrow range like that. But in terms of normal markets, I'm not sure we have a normal market. Whatever this market is, this is what it's doing. Really big outside moves, really quick moves, a lot of buying, a lot of selling, panic selling followed by panic buying. Okay, so that sort of sets the backdrop for what we're in right now. All right, so let's have a look at the site. Sectors, on Friday we ended lower after making a new all-time high. And then in the after-hours session, right after market close, some news came out about Turkey and a coup underway that turned out to be unsuccessful over the weekend. So a failed coup attempt. Markets dropped about 10 points in after-hours very quickly. Volatility rose a little bit. But that's now that the night session on Sunday night has started, that's all been taken back. So everything's been erased. Nothing ever happened. So let's erase that. It was a political issue that could have been a bigger issue because it's right on Europe's doorstep. But the news now is that nothing happened. Okay, so we'll move on to internals. Market heat map. Advanced declines are pretty neutral, I would say. So we've got NYSE, Nasdaq very slightly bullish, S&P, Nasdaq 100 indices very slightly bearish, Russell 2000 very slightly bullish, advanced decline, but a bearish trend. So I'll show you more on that shortly. Ignore the day type indicator because this is a weekend, so it's on a timer. On Friday it was a neutral range day, and during this period we definitely had neutral ranging internals. We did for most of the day anyway, although I would note that the dollar weighted buying pressure turned south late morning and stayed there for the rest of the day. So there was net money outflows in key market moving stocks. However, we had a bit of a rebound in the intraday McClellan, which is based on advanced declines. So, so these two were not in agreement all day long. So a bit of divergence between them. Not terribly healthy market. Very close to a break above the old all-time highs, and probably it's fairly likely to see some pullback and some consolidation, and there's some selling here. We see some selling, evidence of selling. All right, net issues. There's a combined net issues on NYSE and Nasdaq. Negative for a chunk of the day, but ended slightly positive. Net volume, which is also combined NYSE and Nasdaq net volume, spent a good chunk of the day floating around zero, most of it below zero, but ended very close to zero. So not a lot of selling pressure on those. Okay, breadth. I would say neutral on pretty much everything. First column, first line relates to NYSE, second to NASDAQ combined, third to the Russell. One thing I would note is that when you get a high of the day very early in the day, like the Russell made, and a very extreme, the 8-to-1 advanced decline on the bullish direction, and then immediately pulled back to negative, a slightly negative number, that can indicate a top. Now, I'm not saying the market has topped, but that can indicate that's an early warning sign that there was we sold heavily into higher prices, and there was no buying to speak of to follow up on that. So although I would say the Russell for a while has been marching to the beat of its own drummer, I'll show you that quite clearly when we get to the bigger charts. Unlike the S&P, the Russell and also the NASDAQ 100 have not made new all-time highs. So what does that mean? We don't know yet. But also, this is a weekly chart. We're at the top of the Bollinger Bands on the weekly. On the Russell, we're above them on the weekly. So we're quite overbought in the short term or mid-term, I would say, on a much lower high. So how that's in direct opposition to the S&P, which is also overbought. It's more overbought on a daily, and we can see the stochastics are starting to turn down. So, and we've got something like a doji or something indicating a potential top that you get at some of these local areas, right? So. But the difference between the S&P 500 and the Russell is quite extreme. It doesn't look like it on the daily, but when you go to the weekly and look at that old high back in June last year, we're still about 5% south of there, and we're overbought. So what does that mean? Probably a pullback in sub 1200, certainly about 1160, where we have a confluence of moving averages, or lower potentially. So but the price action's been so bullish, it's been hard to be very bearish for very long. We on Brexit we had a very quick drop, and one of the fastest rallies I've ever seen, off the sub 2000 level on S&P. We just they rallied like it's never been on sale like it was then. So price action's still bullish, but it's a bit frantic, and it's hard to trust the market that's a bit frantic like that. So especially with the Qs and the Russell on lower highs. So there could be some danger ahead. I don't really like what I see in this market, and for the most part I've been playing it very lightly lately. Okay, volatility picture. VXST in terms of an outright price is almost as low as it goes. We touched sub 10 just after hitting an all-time high. That's it. If you chart VXST, I will go back to it because I think it's worth pointing out. I believe, here's VXST. So if we go to VXST on daily and look at this level as a line, every single time it hits these zones of the tens, or even sub 10, it's been the beginning of a move up in volatility. I'm not saying we're going to have a repeat of August last year, but every time, short-term volatility, short-term implied volatility gets really overdone to the downside, and at least you're going to get a mean reversion move very soon. So again, we hit under 10, we close at 1026. We're probably going to get a move back up to the 15s, 15-16 region, where there are a lot of moving averages, and I think same with the VIX. Now note that VIX expiry is regular OPEX expiry was Friday. VIX expiry is next Wednesday at open. So we have a bit of a funky opportunity where there's still room for VIX to have a very quick pop-up before expiry. So I'm not sure that'll play out, although it looks like it's pretty much set for it, right? We have a bottoming looking candle on the daily, and I could easily see VIX popping up from the 12s back to 15, 16 region, where this confluence of moving averages are. Very, very oversold on the daily. Volatility tends to get crushed on these massive panic up moves on S&P. Yeah, so let's go look at the remainder of the site and some block trades, and we'll get a look at those. Okay, so in terms of block trades, this is the SPY. We have a lot of activity in the topping area. So this is 215. Just under 215, low 216s, 216.11, so on. Every time we bumped up against that region, there was a lot of activity, which means I think that there's been a fair bit of distribution up here, and that's a fairly new pattern because everything. Let me go to the longer term SPY chart. This is months of block trade data, but you can see that when we went up, we consolidated a bunch of buys, a bunch of late reported block trades, and we popped up. And then we did. There's no standard pullback moves. It's consolidation, pop, consolidation, pop, consolidation, pop, and so on. And that pattern's been repeated. And you can only see really now that maybe we're starting to get some distribution on the highs, and price dropped below those. So the really easy play is 216, low 216s, high 215s, low 216 area is going to be your resistance. Obviously the high was back here, and there's been some evidence of selling. Support, initial support, we were below there on Friday, so 214.98. Just below there. We closed, maybe 30 cents below there, something like that. So on SPY, we're below the initial support. Next lines of support come in 213.44 and 212.70 or 71. Okay, QQQ, very similar picture. Some distribution on a high, actually right around support. 111.22 is our initial support line, and there are lines lots below there. So 108.63, sorry, I missed this one, 110.30, 108.63, and 107.45, we'll say. IWM has had a lot, this was the sort of consolidation pop, but a very big trade, 2.4 million shares in one go, and a lot of other in the over a million range up here. So basically, your high water mark is this big trade. Sorry, it resets. 119.73. 119.38, that kind of thing. Support at 118.15, support at 116.76, and support at 114.16, we'll say. Okay, volatility, ETPs. I'm going to focus on VXX and what's happening there. There was, when we were in the 17s before this last mania rally, there was a period of consolidation and accumulation in the 12s on VXX, 12 to 14 range. That appears to be happening again now that we're back in this range. Now, we did make a new low, lower than the previous low, but there are quite a few large block trades, 2 million, 1.7 million, a lot around the 500,000, a few, here's another million. It seems like every time we drop a little bit, somebody's buying a million and a half, or 500,000 shares, accumulating what would be a fairly large position. I think it's unlikely that people have started fresh shorts right here at the $12 range. So on our site, we've taken a trade a couple of days ago at 12.02 long. We've actually, our stop is held, or our stop was 60 cents, so 11.42, and that's held so far. It's held 3 times, so it's held here, and held here. So although we've gotten close, we're still alive. and I think, given the pattern of block trades, we're going to see a volatility move probably before VIX OPEX on Wednesday, would be my guess. So probably we'll make a market wants to rally a bit more. Maybe it's done now, but I think the any high on Monday during the first half of the day is probably shortable on ES or the S&P 500, and probably buyable on volatility for at least a pop. Okay. I think maybe we'll have a quick look at the put call. Yeah, so this is all CBOE put call. Got very, very low. Put call ratio got extremely overdone to the downside. So that's a sign of excess optimism, and generally when that happens in these sorts of regions, you can see every time it gets below, sort of 0.5 or so, and we got down to under 0.3, 0.265 or something like that. We have a pop in the put call ratio, which means that things are getting more bearish, which means the market's been moving down, right? So yeah. So this is the SPX. Put call ratio got very low as well, as low or lower than all these points that caused a rise in the put call ratio and a corresponding drop in S&P. So same story here with the NASDAQ, and the OEX got to about its low, about its bottom. These put call ratios tend to oscillate. They hit an extreme low, and then they pop, and they move back down as the event unfolds and unwinds, and worry subsides, and that's about it. So I tend to look at these things as being very mean reverting. Something like in the 0.8 to 1.0 range is quite normal, and any extreme below or above that tends to mean revert, and in this market in a very short time. So yeah, I think that's about all I have to cover for today. I haven't done one of these in a little while. I will do them more regularly from now on, and we will see you shortly. Thank you very much for joining, and we'll see you soon.